I mean, if you think about the world before AI agents 18 months ago, things have progressed so much quicker than anything that I ever remember. It's amazing. It's exciting.
I know you've mentioned this in the past. Also, on the operational side, you see a lot of potential for AI, right?
I don't mean that in a bad way. I mean that in a good way. I love being in front of clients, helping them plan, helping be their, we call it personal finance CEO.
Doesn't mean that you don't need advisors. I think the nature of the engagement, the conversation, to your point, will be different because obviously the type of people and their requirements have changed, and obviously the broader ecosystem has changed. But have client preferences also changed? Like, how is it in terms of working with a baby boomer client versus a Gen X or a millennial?
I think the younger generations are much more technology savvy and much better educated in general. And that generation likes to delegate out things that they don't like to do. But what they're looking for is kind of someone who's guiding them.
What you would think is that the current generations wouldn't be as interested in having an advisor. But apparently the facts are the exact opposite when they've done surveys.
The old advisor used to tell you, this is what you absolutely should do, and you would listen to them. And today's advisor is more collaborative with a client.
Well, obviously we started with commission-based advisory, and then that moved to a fee on the AUM advisory. Are now people thinking more and more towards a flat fee kind of structure, or is that still kind of early days?
We look at it today as a fiduciary responsibility and saying, hey, we don't charge you commissions, we're not going to churn the account. But at the same time, if you're charging in AUM, the account goes up by 20% next year because the market went up 20%, which you couldn't control. You got a 20% raise, the client's paying 20% more. Where's the fiduciary part of that? And then I think technology is going to force that to happen too over time. I think in today's world, there's so much information. It's actually confusing to know what applies to you. I truly think in 10 years from now, the advisory business will be taken over by AI. It's nothing to be scared of unless you're not doing things that can be replaced.
Hello, Steve. How are you doing?
Good. How you doing, Vineet?
Very good, Steve. I think, I'm very excited to have you on our brand new podcast, Advisors Ally. And very excited for our conversation as well.
Same here.
I think, Steve, the last time we met was a couple of months back in New Jersey, and it was a lovely conversation and over a lovely lunch as well. Unfortunately, we don't have any food on the table today, but still very excited for this conversation. I know much hasn't changed in the last 2 months, perhaps, but we'll cover a bunch of topics today. But to begin with, I'd like to go a bit further out and understand a little bit about your journey. I think you're a very unique advisor in the sense that you began your career as a pharmacist. But I'll stop there. I'd love to learn a little bit more about what got you into the space and what the journeys look like, and so.
Yeah, sure. I think a lot of, at least it used to be, a lot of financial planners got into the kind of the space from somewhere else. Because it wasn't up until recent that they had degrees in, financial planning. So usually, unless you were in the kind of the sales side of it, if you were a planner, you kind of came there from another career. So I came from pharmacy. So I graduated pharmacy school back in the early 90s, got my PharmD. And I always loved finance, though. I mean, I think I told you the story when we were together last time. In sixth grade, we had to chart stocks. And I'm not that old, but it's just technology's going fast. I mean, we used to get the newspaper and used to look at all the stock quotes every day from the previous day. And so we had a chart on a piece of graph paper, the stocks. And I was hooked from that point in time. So I always wanted to be somehow in finance. I didn't know exactly what it was, but long story, I became a pharmacist and I still always wanted to do finance. So I left in the late 90s and I worked for a major brokerage firm. And then I went on my own in 2002. By the end of 2002, I went independent, and that's kind of where we are today. But I always had more of a kind of a focus on the planning side of things rather than trying to sell stocks or mutual funds or things like that. Feeling was as a pharmacist, I was kind of a consultant to people about their health. And so in finance, I was a consultant to people on their financial picture, their financial health.
Got it. No, I think it really comes through because I think, and I've heard this from you in conversation about the commonality in being a pharmacist and an advisor today. Different fields, but there are some commonalities. I do have one question. Firstly, that's a fascinating story because clearly you were an investor from a very young age. Which stocks did you trade or track back then? Do you remember?
Yeah, actually, it's kind of a funny, little bit of a funny story. So when I got to around, I think I was either a senior in high school or I had just graduated. I thought, well, let me actually buy my first stock. And so I didn't know about, I didn't know how to buy one yet. So I didn't go like a Charles Schwab or anything like that. So I called a brokerage firm up and I said, I want to buy Glaxo, which was a pharmaceutical stock and still is.
Nice.
But back then they were new. They had just come out with this Zantac, which was for, stomach ulcers. And so I invited me over, and I was only going to invest back then. It was like $1,000 or $2,000. And so I get there and the guy's like, oh, you don't want to buy that. You want to buy this. And he got me to buy, it was Metropolitan. It was a company that back then owned Pillsbury and different companies. I didn't want to do it, but I figured, well, he probably knows more than me, I guess. So I bought that. And then I actually went to Schwab because then I learned how to buy something. So I went to, I think it was Charles Schwab back then, or E-Trade. I think it was Charles Schwab. And then anyway, I bought Glaxo and my stock went up and his went down. And I start to think, well, I mean, maybe I know something, which of course is bad, but it was like beginner's luck. But, I bought what I knew because I worked at a pharmacy at that point in time and stuff like that. So that was the first two stocks that I bought, the one that I didn't want to buy, but the one that I wanted to buy. So.
Got it. And there was enough indication and hint there that maybe there could be a career here as well. Fascinating.
It was just a passion that kind of grew over time.
Sure. And it's interesting that you mentioned there that, that a lot of people have come into the space from other fields and other careers. And possibly that has to do a little bit with the massive wealth generation that's happened in the last few decades in the US and the baby boomer generation. And also the kind of maybe the last 10, 15 years, this phenomenon around independent advisory fiduciaries and breakaway RIAs. Is that some of the primary kind of reasons, or was there other reasons why this industry is so big from an advisory standpoint? There's 300,000 advisors, I understand, in the US today.
Yeah. There's a lot of advisors. I think one of the issues that we're seeing, though, is that a large portion of those advisors are older. So they're in their late 50s or early 60s or even 70s. They haven't left the industry yet, but they're established. They're going to retire over the course of the next couple of decades. And that's actually, from what I understand, a large portion of advisors. There's less advisors getting into the industry who are young. There's more mid-career, again, but there's less that are getting into it young. I think that's why the schools have started to come out with the financial planning degrees, so that as soon as you're done with college, like my son had done, he can sit for the CFP exam, for example.
Right.
But there's definitely a shortage, and I'm sure we'll talk about in a little while how technology can kind of bridge some of that gap. But yeah, there's a lot of advisors, but there's also a lot that will be leaving the industry over time.
Yeah. I think, there are different numbers being quoted. I think somewhere I read that there's potentially a shortage of 100,000 advisors in the next 10 years, which is massive if you think about it. So why is that? I mean, are youngsters not as excited about the industry as the advisory industry, or are there other changes that are happening in terms of client preferences? I
don't know. If I had to make some educated guesses, it's a combination of technology with the younger generation, I think I don't know how to say this, leading to distrust of traditional advisors. The younger generation doesn't want to be sold something, and they don't necessarily feel like they need the guidance that a baby boomer had needed. So if you think about it, technology's moved so fast, right? So, in the late 90s, early 2000s, if you wanted to find out about a stock, there wasn't as much information out there, or the technology wasn't at the point where you could easily find the information or synthesize it. Fast forward to today, and it's a lot easier to learn how to buy it. I mean, YouTube, right? It's a lot easier to learn how to buy a stock, sell a stock, short a stock, do options on a stock, get education on financial planning. And all that's an opportunity for advisors in the future. But I think for some reason that's also created an environment where the younger generation hasn't looked at it as a career. but that's just speculating.
So, and I think, and clearly, I mean, your kids are, excited about the profession. They plan to join your practice. I know Aiden, your son, already has, and you made a mention of him earlier. How did you convince him, or was this his calling from the get-go?
It's funny. I mean, I didn't mention the kids at all about kind of getting into financial planning. I think they've said to me, I don't have to think, they've said to me, we see how much you love what you do, and we'd like to do that too. But remember, I mean, we've talked about it. My practice is a little bit different in that, we don't just manage portfolios, right? So I think if a majority of my practice was managing portfolios and stock trading and things like that, they probably wouldn't have been interested in that. But at least what we're doing currently, I don't know, 10 years, 20 years, can't easily be replaced by technology.
Right. Interesting. And I'd love to kind of double down a little bit about your practice and your vision. But before that, actually, you touched upon something with technology. And obviously, on one side, we know that the average or median advisor is 50 plus. And there's also a massive wealth transfer that's happening from the baby boomer generation to Gen X and then millennials. And there's the talent shortage as well. Not enough people are coming into the system. So it's kind of like, it's a bunch of things that make the whole ecosystem quite complicated. But one thing I'd love to kind of hear from you is you're 25 years, you've been in this business, and a lot has changed. Like you said, there's information is more readily available. That way it's democratized. Obviously, there are newer platforms like Robinhood, etc., which, somebody just wants to get on a few trades for free, etc. They can try it out. But have client preferences also changed? Like how is it, in terms of working with a baby boomer client versus a Gen X or a millennial client? Have you had much exposure to the contrasts, and any thoughts on that?
That's a good question. I think the older generations, and I'm a Gen X generation, so I think that's kind of the teetering point. But I think a lot of Gen X's, baby boomers, and what's left of kind of the greatest generation, they're delegators, and they want to delegate as much as they can to a financial professional. There's a degree of, I think, trust that they want the advice, and they want the advisor to do the task, right? So whether it's the full financial plan or whether it's all the different facets of financial planning. I think the younger generations are much more technology savvy and much better educated in general about stocks and bonds and mutual funds and ETFs and crypto and those types of things. Right. And that generation likes to delegate out things that they don't like to do. But what they're looking for is kind of someone who's guiding them more than kind of like physicians, right? So the old physician used to kind of tell you what to do, and the current physician kind of advises you on what they think would be best for you to do. And then the same thing with advisors. The old advisor used to tell you, this is what you absolutely should do, and you would listen to them. And today's advisor is more collaborative with the client, the younger generation.
Right. Interesting. No, that is actually a very nuanced way of looking at it. So it's kind of more like earlier this was the way to go, and now it's more like this might be a good way to go about it. What do you think?
Yeah, I think what happened is that in the past there wasn't enough technology out there or knowledge out there, the ability to learn, that the older generation basically needed the advice of an advisor. And then I think in today's world, there's so much information. It's actually confusing to know what applies to you. And so the current advisor, I think, working with Generation X and younger, I think their role is more of saying, this is what I think you should do. I have the expertise to build this. I have the expertise to show you these different areas. But in the end, it's up to you, and we'll make the best of whatever you would like. You know what I mean? So it's a much more, I kind of go back to that collaborative practice.
Collaborative, yeah. And that actually makes a lot of sense, because I think MicroKids has recently posted on LinkedIn about what you would think is that the current generations wouldn't be as interested in having an advisor. But apparently the facts are the exact opposite. When they've done surveys, they're realizing that, even the millennials and Gen Xs do want to have an advisor, especially I think maybe they just go a bit further along in life, or once their income and savings go up. But So, which is great news for advisors. Doesn't mean that you don't need advisors. I think the nature of the engagement, the conversation, to your point, will be different because obviously the type of people and their requirements have changed, and obviously the broader ecosystem has changed as well.
And what I found is that the more an advisor knows, so it tends to be the younger generations, Generation X and younger. Actually, the better it is from an advisory standpoint because there's less basic education that you have to provide. Right? You can kind of get into more sophisticated conversations with clients because they know more coming in, which is great. And again, that doesn't kind of replace the advisor. What it does is it lets us get to the next level with the client that it would have taken with the older generations to get to.
Got it. It keeps you on your toes then.
Yeah, and definitely keeps you learning.
No, fantastic. Actually, on that note, it'd be also interesting to hear, right? Like, obviously, there's something that's brought you to the current version of your practice in 25 years. And I know we've talked about this before. Your vision goes much further out, and obviously your kids, the next generation is also joining the practice. Tell us a little bit about your practice, what your focus is on, how you differentiate yourself.
So I start off having a regular traditional practice, and we charge clients assets under management and just what a traditional advisor did. Most of them manage a portfolio. If you did a plan, you did a plan, but it wasn't an extremely integrated plan. And then about 3 years ago, I started to think about the future of my practice and kind of also thinking about Aiden joining me in the future. And I thought, and also my assets and my financial picture has grown over the years too. And so I started to think about what clients would want in the future. And so I created a flat fee practice, and we're still, honing and kind of building that. But the idea was that someone's not charged based off of the amount of assets they had. They were charged for the package of services that we provide. And so as, there's commercials out there that say, we do better when you do better. And my feeling is why? Right. I mean, if it takes me the same amount of time from year to year, when you do better, you should do better. And, we're there as your advisor. So, we charge a flat fee depending on the kind of the tier of service that a client would like. And then we provide advice in all 5 areas of personal finance. So we look at that as the financial plan, which is the plan itself, cash flow management, those kind of things, estate planning, insurance planning, investment management. And we don't care where assets are held. So whether a client has us manage the assets directly or whether they keep them in their 401k, it's the same price because it's a flat fee. And tax planning. And so all those things together, we review with clients over the course of a year, planning year. And to us, that's kind of the ultimate practice, right? So clients, getting investment management, but that's really 20% of what we do. It's the other 80% that they tend to thank us for over time, right? I think I mentioned to you, I have clients that when I started in the business, they were in their 50s, and now they're in their 70s, and some of them their 80s. And no client, as they've gotten older, has ever thanked me for having $3,245,064. What they've thanked me for is, geez, I really appreciate you telling me to pay off my house when I did, how much we needed to save to put the kids through college. You're saving enough so that we could go on vacations with the family every year. It was those things, the goals and the values behind them, rather than the amount of money that they had to the exact hour.
Understood. And that's the whole idea of your mantra around the personal finance CEO, right? Like who kind of manages everything, not just one area. And also, I think working with the other counterparties, like say an accountant or an attorney, so on.
So it's a collaborative practice like that too. So our goal is to use the best kind of subject matter experts, right? So we work with a client's accountant, right? They don't have an accountant, they work with an accountant that we utilize. Same with estate planning attorneys. In many cases, we cover the cost of those services or part of those services in order to make sure that the client is getting the best service. I think we were talking about just before this call, I've been trying to integrate that more into the healthcare end of things so that we're looking at their entire health, financial as well as physical and mental and spiritual. Yeah, and so that's it. But it's a collaborative practice with not only the client, but other professionals who are experts in their fields. And so that's kind of, in our mind, the benefit of kind of the flat fee in that we have a fiduciary responsibility, right, to make sure that they're being taken care of in all those areas.
Sure. Do you think that's, interesting to kind of know your view on how you see the investors or the clients seeing this, right? Is it becoming a trend as well? Obviously, we started with commission-based advisory, and then that moved to a fee on the AUM advisory. Is it, and now people thinking more and more towards a flat fee kind of structure, or is that still kind of early days?
I think so. It's funny. I was in the business where at the time when it was starting to convert from commissions to AUM. And you would think that the conversion was because AUM was better for the client. But the firms that I worked for at that point in time billed it as not better for the client, but better for the revenue of the firm because it was consistent. So we look at it today as a fiduciary responsibility and saying, hey, we don't charge you commissions. We're not going to churn the account. But at the same time, if you're charging in AUM, the account goes up by 20% next year because the market went up 20%, which you couldn't control. You got a 20% raise. The client's paying 20% more, right? Where's the fiduciary part of that? I mean, I don't want to get into a whole, because there's reasons that you could, of course, on a fiduciary, and so I'm not trying to bash that. And we do have some clients that want AUM from us, that type of business. But the onerous behind the initial AUM push at the major brokerage firms wasn't because of client, good of the client. It was because of the revenue that the firm could generate consistently. The flat fee, I think, is a growing trend. I think what we're going to see is that more and more advisors charge a flat fee over time that want to provide this truly comprehensive financial planning. I think that the more it happens, the more clients are going to demand it too. I mean, from our YouTube channel, we just had 2 people over the past 2 months that came to us because they wanted flat fee. And so they found one of our videos and watched it, and they liked that idea rather than the idea of an AUM type fee. And then I think technology is going to force that to happen too over time. I think this business in 20 years is going to be a lot more like that.
Yeah, that's kind of what I was thinking in my head as well as you were kind of talking about it. I think technology, next generation of clients might think a bit differently as well. Clearly, it's a differentiator for you right now. We'll see how it evolves, right?
I mean, the other thing too is for technology. I mean, if you think about an AUM, it was because you had specialized knowledge of the markets that the average client didn't. And in today's technology world, all that information is, it's out there.
Right. So I think it is time, Steve, to bring up our favorite topic. I know you're a bit of a tech geek yourself. Weren't you a bit of a programmer at some point? I think.
Yeah, that's what I wanted to do. Yeah, I was in the 80s. I was building computers. I was a kind of a techie nerd there. So I programmed in all the dead programming languages like BASIC and Fortran. And then I also built computers. So there's always been.
So like I said, it's our favorite topic as well. We're building in this space. I'd love to learn and hear your views on how the technology shift has affected or impacted the industry. Obviously, the wider world has seen the shift from internet to cloud and mobile, and now, of course, AI. It's just every day you hear something new that's come up. How has that shift been in the advisory space for you personally?
I mean, it's huge. Just take a look at the last 18 months, right? I mean, 18 months ago, ChatGPT was kind of a nascent idea, right? And then today, I mean, the way it's used is almost indispensable for people and a lot of people in general. So, I mean, I think if we go forward, if you're asking what I think of are you asking how I use it today or what I think of it in the future?
A little bit of a history lesson, how it has kind of helped change your way of operating.
Yeah, well, I mean, look, when I first started in the business, we wrote tickets out, and if you wanted to trade, if you were a consumer, you called the brokerage firm and you did touch tone phone, right, in order to place a trade, right? So, and then when I started in the business, again, we placed kind of manual trades, and then, E-Trade, or I should say the online brokerage has made the technology a lot faster. But even in the past 10 years, we've gone from kind of some base financial planning programs and software to today where things are much more sophisticated. It pulls information out from different firms. It integrates to different types of programs. I mean, it's a much, much different environment today than it was. We use AI for managing portfolios or for anything like that, but we use it to help us, do do research, help create scripts that we do or newsletters. It doesn't write it for us, but it helps us generate ideas, helps us get things out faster to clients in a much better way than it used to, much more time efficient way and effective way.
Right. And I know you've mentioned this in the past. Also, on the operational side, you see a lot of potential for AI, right? When it comes to doing some of the grunt work.
Yeah, and I mean, you guys, your software is starting to do that too. But I mean, I truly think in 10 years from now, the advisory business will be taken over by AI. I mean, I don't mean that in a bad way. I mean that in a good way. I love being in front of clients, helping them plan, helping them be their, we call it personal finance CEO, right? I don't particularly like entering the data, doing the key work, and even Aiden, he's been out for a year. He's, would like to be doing more active planning in front of a client rather than entering data. And I think that's where the technology is going to take over things. It's going to be able to parse all the data we want, all the documents that we want from clients. It's going to be able to help us query the documents easier, and it's going to be able to create the base plan quicker. Right? That's still not going to replace the advice portion of it on the human side, but I think it's going to make the financial planner's job. Certainly, it's going to take power planner jobs away. The base, not financial advisor, but the data entry and the administrative assistant type work.
Right. No, I think that's, for anyone who's, and who listens to this, I think that's a very interesting use case about where AI is already starting to make a difference, and it's getting better every day or every week.
The ability to push the information to other programs, which is really interesting too. So the ability to have a meeting and then the recording assistant creates the tasks and then pushes it to the different, if you're using MailChimp for a mailing list, or you're using, a wealth box, or whatever you're using technology wise to be able to push that to there in order so that the advisor doesn't have to go into all those programs.
Exactly. And obviously, this is an interesting industry where everyone's using multiple software systems for whatever reason. So to getting those systems to talk to each other would be a big value add for any advisor. I think that everyone talks about. Actually, just on that note, Steve, you're obviously one of the, you're an early adopter and you're constantly kind of on the lookout to see what else is out there. But on the other side of the spectrum, there are folks who are a bit not skeptical, but a bit wary about, how do I start using it and what are the risks? I know even regulation is slowly getting there, right? So there's not enough awareness of what is right or wrong, but what can I use versus not, or safely use versus not. Any words, any tips on, how to go about it?
I'm very cautious in using things like ChatGPT and Gemini and all that for client data. Like I said, we use it to help us generate newsletters and scripts and help us do research and things like that. I think if you use a program that was built for financial advisors, right, where that LLM, which is large language model, right, if it's not sharing information with ChatGPT or whatever in order to make their systems better, I think that's the type of technology that I use or would use if we were to start integrating client data into it. You don't want to just go to ChatGPT itself and load in all your clients' information, because I think that's dangerous at this point in time, right? But I think if you use a program that's basically firewalled off the sharing of that data, uses the ChatGPT or Gemini in order to do that research, but doesn't share it back with the program itself, I think that's what you have to look for. And I think regulators are going to look for that in the future, when they visit firms. We're in the middle of New Jersey has an investment advisor written examination that advisory firms have to do each year. And one of the questions on there is, do you use AI and how do you use it? So I think they're trying to grasp how advisors are using it and what type of data they're feeding into it.
Right. Very interesting. And I think the good thing about AI, or this version of technology, is that anybody can just use it, right? Sign up on ChatGPT and Perplexity or whatever it might be, and start using it for everyday use. You get a feel for what this technology can do. But at the same time, I like your approach. I think you need to just know the basic nuances of the guardrails, right? For example, if you're in with API usage, the data will not be used for training with certain LLMs. So asking those right questions, being aware, I think is yeah.
But the technology is exciting. I mean, But the amount that we're starting to take away routine tasks that we've done is just it really is exciting. And that's kind of what I was alluding to before with in the next 10 years. I mean, the more that technology can do, AI agents can do in the background, the more we can spend time with clients, which is the fun part.
Right.
That's the knowledge part. So that's what's really exciting.
Right. And is there any parallel to how the shift has happened with AI, right? The leap that we're seeing. Have you seen any parallel with any other technology in your kind of advisory career, or this is just different?
I think, I don't know if you've ever heard of George Gilder, but George Gilder's a technology futurist. So he's still around. He's probably in his 80s right now. But back in the late 90s, early 2000s, he talked about how the technology moves in a logarithmic way, right? So, I mean, it's not just technology just doesn't go like this. Like every advance in technology creates a whole different curve. And he actually was able to link it to every time, I think it was semiconductor size is halved, technology doubles, something like that. And it's proven true, even over these past, 20 something years. But
that's Moore's law, right? I think it's Moore's law.
Yes. Yep. Moore's law. Yep. Yeah. So every 8 years in this industry, we've seen a major advance. When I got into the business, you were still doing a lot of financial plans on spreadsheets, right? I mean, at home, you still had kind of a dial-up connection, right? So, and then as that all changed, when we could put all of our orders in as advisors electronically, that was huge. Right. And then when everything got integrated so that you could do financial planning at a much, higher level using technology rather than spreadsheets, that was a huge, but with the AI end of things, the stuff that you guys are working on, the stuff that I've been using too outside, it's just progressed so fast. I mean, if you think about the world before AI agents 18 months ago, right? I think it was about 18 months ago or 2 years ago, right? But if you think about that world, things have progressed so much quicker than anything that I ever remember. Yeah, I mean, it's amazing. It's exciting. It's not, to me, it's not nothing to be scared of unless you're not doing things that can be replaced, right? So if you're still managing portfolios as an advisor and that's pretty much all you're doing, you've got to be scared. If you're doing comprehensive financial planning and you're always looking for another level of service or integration you can provide to clients, then I think you have a really bright future. So I think it depends on which end of the curve you're on. But
right. But I like the way you look at it. It's exciting. It doesn't have to be daunting. It's exciting. Just be on the right side of exciting, right? And you'll be fine. Listen, Steve, it's been a fascinating conversation, but I think we've talked too much financial advisory. What does Steve do outside of financial advisory? What's your fun activity? What are your other interests on weekend stuff?
Yeah, I mean, we spend a lot of time family wise. I like to go out to eat. I like to boat. So we're boaters. So we live down towards the New Jersey shore. I like the bay, like the beach.
Right.
It's about what we do.
Right. Awesome. Thank you so much, Steve. It's been a fascinating conversation, and I look forward to kind of catching up again soon, and maybe we'll have you back. I particularly like the history lesson as well. And who knows? Next time we meet, I don't know what else AI would have started doing. So we
might be just robots here. So at that point,
thanks a lot, Steve. Appreciate your time today. Great conversation.
Great day. Thank you.